Stocks starting this week hitting record highs. What does the rest of the year and 2020 have in store for investors? Joining us now to discuss is Yousef Abbasi, the Director of U.S. Institutional Equities and Global Market Strategist at INTL FCStone. So, Yousef, to me, it kind of feels like the year's over for the market, right? We know what the Fed's going to do. We don't need a trade deal by year end, at least in your view. So, right, we can just kind of pack this thing up and we'll see you in January.
To some extent, right? Because you have delivered, this market delivered the Fed like a deus ex machina, right? In the unsettlement of the repo markets that happened in September and October. And the Fed jumped on that. They took the opportunity to pivot, go, easy money. Repo operations, obviously, we've seen even today, a 42-term repo operation, 2 times oversubscribed, right? So the Fed is telling you, we're not going to make the same mistake as last year. There's going to be ample liquidity. Nobody's raising rates. I don't think anyone globally from the developed central banks is talking about raising rates. Posture is the most dovish it's been in 6 years. So to some extent, you do have the Fed backstop. It is very active. Now, with regards to trade, you don't necessarily need a trade deal. You just don't need anything to be undone.
Yeah, but don't we need like actual growth in the world to actually make companies' prospects improve and get real earnings?
That sounds incredible. Yeah. But this market has been devoid of that, right? This market has generally been devoid of that. And as it's been devoid of that, but there's still this dream that we're chasing, this escape velocity we're chasing. And what we're seeing is the Fed recommitting to easy money and hopefully getting there. So the growth prospects are on the sideline for now. Obviously, everyone wants to see how the trade deal shakes out. It looks like we got a little closer to phase one over the weekend, whereas the past 2 weeks kind of were showing us a little fatter tail risk on maybe the deal not getting done. So there is reason to be optimistic on trade, but my point is, I don't necessarily think you need a deal to be done and signed in 2019. You just don't need those December 15th tariffs kicking in, and you certainly don't need any tweet storms a la July, August this year.
You can count on that.
So the repo market is one thing, and you sound more optimistic than I thought you would be based on your notes here. Sure. But what about the credit market?
Yeah, so I mean,
we're there?
There are reasons to be concerned. There are definitely risks to this market, but you're never going to have a market that just goes higher with no risks and no concerns. That doesn't exist, right? So the concern on the credit side has been you're seeing a lot of deterioration of the lower tranches of high yield. And so there's a question, and does that ever tick up? And when it happens, is there a catastrophic downgrade of the lowest tranche of investment grade into high yield, and then how unsettling would that be? The reality is right now, the tranches that are getting impacted, in general, they're getting hit by energy and some telecom names that are distressed. They may not be one-offs, though. The one thing we're watching is we're watching the BDC universe, and we're really taking a close eye on their distressed loan level because it has nearly doubled this year. So the concerns in the funding market may be tackled by the Fed. These concerns in the credit market may also be tackled by the Fed. So the Fed is obviously going to keep a close eye on both. We'll see how it
and then just as we go towards next year, I mean, right now, it seems like everything I'm thinking about ends up being in the context of the decade is over, so what did we learn about the last 10 years? As you look to 2020, I mean, it sounds like this conversation we're having, we could have had in 2016, we could have had it in 2015, 2011, and in some ways, it seems like it was always just another version of everyone hates this market and stocks keep going up.
Yes.
Does that feel like where we're headed as we look to the 2020s?
Well, as long as the Fed, ECB, and BOJ continue to willingly expand their balance sheets, and without a credible way to unwind these balance sheets without creating mass turmoil, it seems like those central banks have little in the way of options, right? So you can continue to have a very below average growth global GDP type figure with easing continuing to happen and risk assets continuing to rally on the back of that.
I feel great, guys. Look, I know
I'm not saying you should feel great.
Table over here.
Well,
but if you question the investability of this market in 2011 or 15 or 16 or 17, and I've worked with those guys who have, the guys who were saying 1300 before 1500, and they were wrong. And it's pretty clear you can't fight the Fed.
Right. Well, that's true, but I mean, man, you're putting an awful lot of chips in that basket. I mean, it's just you're a believer.
It's worked.
Believer in that.
It has worked. And the one thing we're watching now is to see how the yield curve is acting, because the behavior of the yield curve is going to dictate the action of value stocks. And so the rally in value stocks is sputtering. because you're seeing the yield curve start to flatten again. We need to see the Fed continue to maintain a steepening of the yield curve, in my opinion, too.
And their actions have shown that I think they obviously pay attention to that.
Yeah,
they obviously
like
care.
them and Yousef like that.
That's right.
I wish.
Hey, Powell and Yousef.
No,
Sitting at that table.
Janet and I, maybe. Me and Powell, we had to get there.
There we go. All right.
Really? I
Yousef
like that. That's
Abbasi, he's a global market strategist at INTL FCStone. Thanks so much for joining us. Have a great Thanksgiving. See you soon.
You too.
Thanks.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.